Worldwide markets this week, JSE large caps with great dividend yields. There's no stopping gold. ASP Isotopes, which is going to be buying Renergen, roaring higher. More taco and crypto blowout. Euro overgeared. I'm Simon Brown. This is Worldwide Markets, episode 652 for 15 October, and I am recording Tuesday afternoon. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and SHYFT, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. SHYFT, powered by Standard Bank. Thanks to SHYFT, thanks to Standard Bank. So let's have a quick look at gold, because gold is, it's being a little bit crazy at the moment. Don't get me wrong, we always like some crazy when it's on our side, absolutely. But it is well above 4,100 and some change at this point. And that is, not just obviously massive record highs, but really, really looking strong. What strikes me with it is two things on the chart. The first is that last week, Friday's close was 8 green weeks in a row. Last time we had that was at the beginning of the year, first week of Jan, and that then went through to middle of Feb. That kind of makes some sense in that regard. But that move in itself was from like 2630 to 2900. Wasn't that huge. This period of green moves has been from 3,300 up to 4,130. We know the story of gold. The question is, could we have 8-9 green weeks, which would be what this week is green? Sure, at some point. However, we won't have a consecutive green week. But if we look at the chart going back to beginning of 2024, and if we even zoom out further, we'd had a lot of consolidation pretty much since from the early days of the pandemic through to early 2024. Gold went sideways in a channel. Then, of course, we got the Russian invasion of Ukraine, and gold started to run. Since then, it jumps. It consolidates. It jumps and it consolidates. And those consolidations can be quite pronounced. The most recent one was the consolidation sort of between 32 and 3,400. It first got into that range in April and spent 4 months there, where it just sort of went sideways. Could trade the range, but nothing exciting was happening. And if you look back pretty much since the invasion of Ukraine, we've had 1, 2, 3, 4 consolidation periods, and each one has been followed by another leg up. My point is, we don't have any legs down. Now, A, that tells me strong bull market. B, it tells me surely at some point we're going to get a leg down. I don't know. Maybe we don't. Maybe it just continues upwards and then consolidate and upwards and consolidate. Someone asked me today, and I don't know the answer. Do central banks at some point say, hey, fam, we've got enough gold? And do they stop buying gold because they have enough? I've discussed before, are they price sensitive? They are to a degree, but are they at some point, we've got enough gold and now we're going to go and buy, euros, dollars, renminbis, whatever the case may be. They also said, do central banks sell gold? As a rule, no. Turkey has at points, but in the UK, but that was 25 years ago. Mostly central banks are buyers and holders. But what happens when they're like, we've got enough gold? And to be clear, gold has doubled in the last 3.5 years. So your weight of gold in your central bank vault, if you haven't even been buying, well, it's doubled in the last couple of years. So there's some, and I don't know. I don't know what happens or if they do stop buying. I do think that as prices go, maybe they sort of buy less, perhaps simply because they have less money, if nothing else. So maybe it's that more than anything to look out for. But at the moment, gold is absolutely on a tear. We love it. We won't complain. We've got a power hour this week, Thursday, 5:30. I'm presenting. Warren Buffett is retiring at the end of the year. So we're looking at the Buffett Blueprint, investing principles for a lifetime. And we'll be talking, what I've done is I've got together about a dozen or so well-known Buffett quotes, and from that distilled his thinking and how we can put that into our own portfolio. And the key point is, none of it is rocket science. And that's perhaps what's best about the Buffett investment philosophy and style. You can go to justonelap.com for more events. You go to justonelap.com/events for more information. It is Thursday, 5:30 in person or webcast. So a lot of folks have been asking around ASP Isotopes. They, of course, are coming onto the, so they're on the JSE. They're going to be taking over the Renogen stocks. That will be for the period, for 0.09. Renogens will get you an ASP Isotope. And it had a storming Monday, up 20+%, and a lot of like, oh, what's happening? A lot of this has been manipulated, etc. But back in September when it listed, I was saying to you folks, this price is wrong. 1,400 is a ridiculous number, and that certainly proved to be the case. Now we've got it trading at the sort of proper levels. We can look at the NASDAQ price, multiply it by the exchange rate, and we get a level. The massive move yesterday, in fact, it was 34% up, and this is thanks to Anthony Clark on the Twitters, Small Talk Daily. Stock concluded, this was from Friday, as a weighting in a new Morgan Stanley National Security Index, given companies' range of specialized products. I'm not massively thrilled by all of it. We'll see. I mean, to ASP Isotopes' defense, what they are doing is they are delivering. And I don't mean delivering on milestones. They're delivering product to clients, which is, you know, a big thing. So I've held my Renogens. It's also a bit of a meme stock, I can't help thinking. You'll go to places that the sort of the Wall Street bets and Red Hot Copper and the like, and you will see a lot of talk around it. It gets some sort of meme sense around it at points in time, and hence I am holding my Renogens, and they will at some point, probably next month, convert into ASP Isotopes, and then I'll make a call. At this point, I'm just enjoying the momentum that is happening. I'm not going to ever argue with that. Friday saw Trump promise 100% extra tariffs on China. This was because of restrictions they'd put on rare earth minerals. I've done a podcast on it. They're not so rare in terms of they're all over the ground, but processing, refining is the hard part, and that's what makes them rare, that refining part more than anything else. That 100% tariff sent the stock market collapsing. We had the S&P down 2%, the NASDAQ over 3% lower. And it's all been reversed because on Sunday, Trump said, maybe Xi Jinping isn't the bad guy, et cetera, et cetera. It was a negotiating tactic. It was only supposed to go into effect on the 1st of November, and it looks like it won't. Much like, remember 90 deals in 90 days? I mean, the world's just moved on from that nonsense lingo. But it did spook, and it certainly was another taco trade. At this point in time, the market seems to be saying, yeah, look, we're not terribly stressed about it. China did clarify that you can export these, but you've got to get the relevant permissions and all of that. Much like it's stuff being exported from the US to China, you need the relevant permissions and everything. We also had Chinese export data on Monday, which was quite strong. Up some, 8% to a little over 8% from a previous of 4.4. I think it was 8.4 for the month of September, year on year. And that just shows that China is finding new markets for its products. Absolutely it is. But what also happened on Friday was then crypto, Bitcoin in particular. Crypto collapsed. I mean, and some of the coins were down 20, 30, 40, 50%. But Bitcoin lost 10%. And my weekend Twitter feed was full of people who had been wiped out, portfolio gone. And on a 10% move, if you're being wiped out, man, you are trading like you're not trading, you're gambling. I mean, you're going to the casino and putting it on green, on 00, and hoping that you get lucky. 10 times gearing is a lot. And to be clear, there are brokerages out there, particularly in the crypto space, that will give you 50 times gearing. So what does 10 times gearing mean? Well, you've got 1,000 Rand and the broker will lend you 9,000. So now you've got a 10,000 Rand position, but you've only got 1,000 as collateral on the loan. So it falls 10% and suddenly you've got no collateral left and you get closed out and you've got zero. 10% move, you're on zero. If you had a 50 times geared, your 1,000 Rand, the broker lends you 49,000. It moves 2% and, well, you are in the same boat. You're at zero. You are overly geared. You don't need gearing on crypto. It's a geared at the money call on the S&P, essentially, the way that it moves. It doesn't need extra gearing. And if a 10% move against you wipes you out, you are not managing your risk well. And if you are all in only on crypto, you're not managing your risk well. I know folks are going to hate me for saying that, but it is just that is what it is. So last week I had a look, and you'll find the podcast out there. I had a look at some good value on the JSE, and there were a number of stocks that jumped up and came out. We were looking for mostly smaller stocks. We wanted them to be paying dividends, although it didn't have to be much. We wanted them a PE of under 10, but plus 0.01, so that they're least profitable, and we wanted them at a discount to net asset value. And the video has been storming up the charts. A lot of folks messaged me and said, cool, but what about some big stocks that have got nice dividend yields? And I thought, good shout, let's have a look-see. So using the Koifin, doing a fairly simple search. My search criteria is JSE. I want market cap greater than $500 million. This only does it in dollars, which takes it to a little under 10 billion ZAR. So that is, to my mind, the level where we start moving into the larger caps. And to be clear, there are some very, very large caps out there. But I then pull up the dividend yield, and I get ourselves a PE, and we've got a fairly decent looking list of stocks. So let's run through it. And some of them, for example, Life Health Care, almost a 30% dividend, but that is a special dividend. Ditto with Itatal. Thungela, again, pops up on this list. Stock's down some 30% in the last year, but its dividend yield is 15, its PE is 4.5. Kumba's there as well with a dividend yield of 11.5, down 14% over the last year, and a PE of 7.2. Single commodity miners, and Exara pops up in a moment as well. You need the commodity to be playing ball, and I don't see what pushes coal and or iron ore markedly higher. So at this point, yes, they can pay dividends. Yes, they're all profitable, but I'm not massively enamored by them. SAPI pops up. Now, interestingly, who was it? It was Alex Dace on my Business Day TV show Monday evening, had SAPI as his stock pick. And there's a lot of moving parts. The stock got quite hard hit with the Mondi update of last week because, of course, they're both in paper. SAPI does sucrose as well, which goes into clothing. His argument is there's a lot of debt on that balance sheet, but they are looking to basically halve that debt in the next 2 to 3 years. And if management can do that, then SAPI is in a very, very good place, notwithstanding a difficult industry. Sun International pops up with a dividend yield of almost 10, PE of 7. It is down over the last 12 months. Sun International really is becoming a betting stock. Sunbet really is becoming it. Yes, they've got some other assets. They've got Sun City. They've got some hotels. But really it is about the betting, and that's going to become a big part of their future. You might have a moral objection to it. I think these betting apps shouldn't be allowed to advertise. That's just my view. And I think there should be other restrictions. I think it's bad for individuals and society. But certainly a stock that's looking cheap. And it's not one that has done much on the charts. It's had a nice run, but it's broadly going nowhere. Although there is some nice higher highs and higher lows from early of last year. So certainly there is potentially a story there. 35 is a good support. And in fact, the 42, which is more or less where it closed on Monday, looks like a good level as well. So certainly Sun International potential there. Old Mutual dividend yield of just over 9. It's up 5% in the last year. The asset managers do well because what's happening here is quite simple, is you find that markets are rising. So they had 10 billion, market goes up 20%. They've now got 12 billion, and they earn an extra fee on that extra 2 billion. Not even performance fees, which maybe they get as well. They're obviously also going to be opening a bank. That gets really interesting. And the same would then apply for Coronation. It would also, I think later we're going to get Signia popping up on the list. So certainly asset managers in a good space. Nedbank, we know the Nedbank story. 9% dividend yield, 7% PE, 9%. You're not going to get that if you put the money at the bank. Our banks are offering good value. Omnia, I worry about the chemical side of Omnia. It is a nice dividend. It is including a special dividend, so that thrills me less. AVI gets me interesting. Food producers. We've seen maize down. That's certainly going to help. AVI always defends their margins. They do incredibly well at that. They've got a dividend yield of just under 9. The PE's 14, so it's not massively cheap in that regard. But it is a company, as I said, who defends their margins. They would rather lose market share. And the chart is looking interesting. It's certainly after the lows of April this year, where it got sub 80, it's back to 100. And I think AVI is one that is definitely looking interesting. Truworths, I don't like Truworths at all. I think they're a bad fashion retailer. We're going to get a bunch of property stocks in here. Redefine. Equitas, I chatted with the CEO on Friday on results. Really good set of numbers, but you're not getting much discount to net asset value, and I want that for security. But if you're looking for logistics, they're exiting the UK. They got local logistics. The average lease, 14.1 years. That's logistics for you. Their logistics is not mom and pops. It is a bit, but their logistics is also Pick and Pays and ShopRites and the like. Alexander Forbes, same story as the Coronations and the like. Ditto ABSA, 8% dividend yield and trading at discount to net asset value. Fairvest, Growth Point, again, both properties. Check those. The yields aren't bad at around 7.5%. What matters here is that discount to net asset value. For me, Growth Point's almost too big. Just buy an ETF. You're almost getting the same thing. Momentum, again, investments. Tiger Brands was interesting. 7%. This is a stock under new management and been doing very well. Yeah, absolutely. Up at 320 odd, but not expensive. It has more than doubled since in the last, almost 3 years. More than doubled, but it's not yet expensive, and it is coming with a dividend yield that is quite chunky. Where it is it? There it is. The dividend yield 7%, PE is 14. Resilient pops up, property, and then of course we get Investec, 6.5. If you want banks, I'm not sure. I struggle to get excited about Investec. Roynet, I like. They do cables, they do defense. Both of those are in good spaces. They've had a massive sell-off. They've been a little bit range-bound since sort of mid-year, which is back at levels that were important back in 2023. I think there's something there. They've also got Nashua. That's probably having a bit of a tough time. But the defense is doing well. And their cabling business, we need transmission lines. We absolutely do. High prop, again, properties, Fortress, Attack, a lot of that. Standard Bank. Another bank, same story, a little more expensive than Nedbank and ABSA, less expensive than First Rand. JSE Limited interests me. Dividend yield just under 6%. PE is 12. Now, that's not an onerous PE by any stretch. But what we have got, announcement that Leila Fourie is leaving after 6 years. Vivian Reddy will be taking over. But again, we got markets at records. We're seeing volumes go through. It used to be sub 20 billion a day. Now it's closer to 30 billion a day. That directly translates into profit for them. The market knows this. In the last year and a bit, the stock has almost doubled in value. But I got to say, I think there might be some value still there. And that dividend yield is probably fairly safe. First Rand, we know the storing for Kile, property, Spain and South Africa, really good. Dividend yield only at 5.2. RCL Foods, yeah, I mean, RCL Foods is an interesting one, and a decentish dividend yield of 5.4, and the price earnings under 7. So the stock is cheap. Netcare, I don't like healthcare. And then we got some platinum guys. So Volterra pops up, and they're obviously having an absolute storming period. That is going to continue. PGMs are strong at the moment. But to be clear with Volterra, I mean, it's not even, it's about a little under half of what it was at those highs during the pandemic. Of course, those highs were about a third below the highs, a third to 40%. Rhodium was at 30,000 there. We've got platinum and palladium moving strongly, but the others not, well, rhodium not so much. Motus, I've been talking the car story for an age. Motus is good. You could do, we buy cars is expensive. CMH is too small for this list. It doesn't crack the dividend, the requirement for 500 million market cap. Telkom is interesting. If we look at the deal that was done with the Remgro guys and Vodacom and was it Doc Fiber? No, not Doc. The whole. And if we take that and value it to Telkom, Telkom has a lot more value left. The SwiftNet deal means that their debt is almost gone. I think Telkom might well be in play. And who would buy them? MTN, surely. I do think there's I know they had a bit of a dance a while ago. It didn't go anywhere, but I think that is possible. Grindrod I like, and I haven't had a look at the Grindrod chart in some time. It's back at the levels. There's some more problems in northern Maputo, but their ports are doing well, and that trend is going to continue for some time. Grindrod has long been a firm favorite of mine. Vodacom, I don't like the telcos. Bidvest. The market hated the Bidvest results. The stock is down 21% in the last year. Dividend yield is just over 4. PE is 13. They've taken on a bunch of debt. They've done that hygiene business in the UK. That certainly people are worrying about. A lot of smaller deals as well. But they're highly cash generative. So that debt will fade away fairly quickly. It's found some good support around the 200 level as it has before. I think Bidvest is looking good, and I'm seeing a lot of support from that. A lot of folks picking it on their lists as well for the Stockwatch show. Adcock, no. Mr. Price, sorry, missed that one. Yep, like Mr. Price, 4%. It's come down a lot from its highs of last year, but Mr. Price, I think, is looking very good. Adcock's delisting, Barlow World's delisting, Woolies, man, they got to get their fashion right. Outsurance, I like it. Australia's doing well. We'll see about Ireland. Advotech, I was surprised to, man, it's only a dividend of 3%, so it's not that thrilling. And we're now into that part. I mean, ShopRite's here, dividend yield of 2.7. So by this point in the process, we're kind of running low on, Discovery pops up, but it's a dividend yield of 1.1. That is not a giant dividend yield by any stretch of the imagination. So let's leave that there for now. A lot of stocks there, some nice dividend yields. The key thing, as always, do your own research on them. And the other key point is that dividend sustainable? In most of those that we touched on there, I would argue that, those dividend yields do look sustainable. Some specials, if there's a special dividend, obviously expect that to be a one-off. Worldwide markets, powered by Standard Bank Global Markets, Retail, and SHYFT, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest Forex rates anytime, anywhere. SHYFT, powered by Standard Bank. Thanks to SHYFT, thanks to Standard Bank, thanks to you all for listening. Remember, this Thursday, Power Hour, 5:30, thisonelab.com/events, more information and booking. We'll chat again next week. My name is Simon. As always, look after yourself, and if you can, look after somebody else as well. Cheers all.